Jean-Paul, thank you. You would excuse us here at the southern tip of Africa, the southern tip of the continent. Indeed, we were focused on WEF, and I'm hoping that you did see parts of it. So I'm not very well clued about what's driving you guys higher. Is it because the president has been busy again on his 140-character phone?
Well, it's been another particularly hard or interesting week for the markets from an economic perspective. Lots of happening, and I think that the risk scenario remains highly on the upside.
Which is not a bad thing, isn't it? Because the world economy does need it. I see U.S. job numbers came in the last few minutes, and we have an increase of 130,000 in August when the market was looking for 150,000. That does seem to suggest that the case for interest rate cuts going forward could well be stronger than perhaps the markets are looking at, no?
Yes, in fact, the jobs data that was released, as you said, is softer than what was expected. As a result, in fact, today, the Fed chairman is expected to deliver a speech in Zurich, and all markets are actively waiting for the signal from his end about what the Fed will be doing. I think that now the expectation of rate cut is very high. So we're expecting some stimulus coming out over there. On the other hand, today, European growth figures were out. Germany is negative, in negative territory again. UK is a negative territory again. Italy is on zero growth. So in general, the European economy just grew marginally by 0.2%. So we're seeing that a number of factors, the US trade war, Brexit, all these risk enhancing factors are having a tangible effect on the global economy.
Yeah.
And I think even the trade war now, although there is expectation for the talks in October, I actually think that the markets are being a bit too optimistic that there will be a solution to the trade war.
Yeah.
I actually think that control is actually being lost of the tariffs.
Yeah. So the markets are pricing in some kind of stimulus. I wanted to know what kind of stimulus the markets are pricing in.
Well, there is always this expectation because ultimately the markets have been in quite a bull, coming from a bull market. My understanding is that risk is not actively being calculated. Rightly, we're seeing as well, in fact, a shift into alternative assets. For example, the Bitcoin price going up. We're also seeing that gold remains a strong commodity over there. So there's always this risk misalignment.
Right. So
what's so interesting that we did not mention, and that I did not mention, is also Hong Kong and what is happening there, and that the effect on Chinese investment as well.
Right. I wanted to know, I think many people, and I think indeed the markets there in Europe as well as the US and other parts of the world are have already priced in a 25 basis points cut. I wanted to understand if you think today's numbers suggest that the Fed could well get room for a 50 basis point cut.
Well, the speculation is going very much on the 25. I have my doubts on whether it will be so aggressive at this point in time. There's also, you have to see it within the whole political context of the establishment or the president attacking the Fed. So there are different tensions going on as well. So that will be interesting to see how that will pan out. Maybe today's speech by Fed chairman will start shedding light more on what the Fed is actively going to be doing in the coming month.
Yeah. There in Europe, of course, in addition to the things that you have been talking about, is also the backdrop of Brexit. The clock is ticking for that October 31 exit date that's been set by the Prime Minister. But we've also seen in the last few days huge infighting amongst the Conservatives and confusion as to what actually the final picture is going to be. What are you anticipating will be the final outcome of all of this? Are we having an election before October 31, or are we likely to see the deferment of that exit date?
It seems that what has always been defined as the mother of sort of constitutional democracies might actually have a constitutional crisis in the coming weeks. Parliament seems to be very adamant not to make the 31st of October happen. The Prime Minister wants to go for an election. There's also a lot of inter-party movements. We're seeing now even Labour MPs defecting to other parties. So there must be a lot of strategic happening. What's going to happen is very much an open discussion. I think that possibly there will be a proper mutiny on the Prime Minister, most probably within the party. So it's risk is sky high. Unfortunately, investors are the people that are suffering the most because no one knows exactly what is going to happen on the 31st. Companies are busy trying to establish backup plans, but also those are highly costly. We have companies that are moving out of the UK. Once they move out, it is highly unlikely that they'll go back. So there's going to be a very painful transition, whatever happens on the 31st.